Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Morning, guys.
Morning.
Morning, Prashant. Morning, Nigel. Biggest queue. We're counting down. It's just 2 days now. Penultimate.
2 days to what is the more important question?
The weekend. It's always the countdown.
What kind
to
of a weekend?
The long one.
weekend.
But it's the last long one in a while.
Yeah, that's the bummer. That's the downside. I'm trying not to think about it.
All right. Well, so starting on a cheerful note, as always, let's just quickly take a look at what the Q's handoff is from Wall Street and the things you need to know as we begin a fresh trading session. It's been a mixed close in the US market. Nasdaq is doing a little better. And that, by the way, has been the stronger index all through this year. It's been tech versus banking. Tech has outperformed banking handsomely from the beginning of this year. Banks, of course, have been roiled with their own troubles. The Nasdaq ended 0.5% higher. The S&P was down about 0.4%. Now, Microsoft, remember, beat expectations. The stock jumped. It, by the way, what it did overnight for Nasdaq was that it boosted a lot of cloud stocks because the cloud business of Microsoft, Azure, has done very, very well. And then you had the Meta numbers, which I think will keep sentiment in the tech space, the broader tech space, very, very good. Because the numbers are a beat and the stock is up 10-12% post hours in the US. So technology numbers so far, starting with Google, Microsoft, Meta, this is mega tech, large cap numbers out of the US, which have all beaten expectations very well. Now, of course, there is on the other side, you've got the sort of, old economy companies like, for example, UPS, which delivered numbers which were very subpar. For example, the Dow Transportation Index over the last 2 days is down 7%. So there are lots of moving parts here which are going out. But the fact is, I mean, if you just want to see which are the companies with the largest weight in US indices, it's these mega tech companies, mega large cap companies, and they're doing well in terms of beating expectations. All right. Now, for India, the important thing also to note is that oil has seen a very sharp sell-off. Oil prices, Brent, by the way, is down 4% last night. It touched about $77.68 a barrel. This is important to kind of note in terms of the amount of oil. We're one of the largest oil importers, and this is good news unambiguously. On the market here, we once again saw a late push higher. The Nifty ended about 0.25% up. It's not big, but the fact is it's a vast improvement from where we were at open or in the first half of the session. The push came later into the session. In the near term, the levels remain the same. The level to take out and conquer is 17,863. We need to move above it, and we need to close above it as well. 17,863, it's about 50 points away from where we are. Once we do that, targets of around 18,100 come into focus on a successful break of this level. Yesterday's low of 17,711 can be used as a near-term support level. It was a big candle day. The market bounced off. 17,711 can be used as a support. On the Bank Nifty, the immediate resistance, by the way, banks have been the stronger part of the market as compared to the Nifty. For the Bank Nifty, and Bank Nifty, by the way, is trading above its previous high, unlike the Nifty, which is yet to take it out. The immediate resistance is 42,966. It's a number we've put out over the last couple of days. And again, yesterday's low, which is 42,432, where the index took support and then saw a decent bounce in the intraday, should hold for upsides, for potential upsides to remain. I mean, the pace is not 1,000 points in 10 days like what we saw from the lows of March. It slowed down a little bit, but I think it's very clear that buying the dip impulse is very much there, and the market is slowly but steadily sort of moving up 40 points, 50 points, but that's been the kind of market we're in. Broader markets, a lot more action. Single stocks, it's been completely crazy, 5-10%. So many of those stocks moving around over the last few sessions or so. Surabhi.
Prashant, yes, absolutely. I just want to add to the point that you made on the big earnings in the US. While tech obviously has been taking things higher, what's negating it is some concern around banks all over again, right? We've seen those headlines on First Republic. First Republic Bank, by the way, was down another 30% yesterday after falling 50% in the previous session. And all kinds of, permutation and combinations are being speculated upon all over again. Remember, this is the same bank where the top US, the big boys, the big lenders like JP Morgan, etc., they had pumped in $30 billion in deposits to shore up confidence. But despite that, we've seen what's happened. There continues to be a flight of deposits. And now there's a lot of guessing game going on, whether there'll be a bad bank created to sort of carve out the bad assets, whether the biggies will come together to buy this one. So this has again become a talk point on the street, and that's kind of tempering the enthusiasm, which is why even if you see when the Nasdaq has a life of its own for obvious reasons, but yesterday in the actual session, you saw the Dow and the S&P 500 ending on a downbeat note. Of course, Prashant's already mentioned big tech is the good point. We had Microsoft surging 7% during regular trading. Meta has been surging 10-12% in after hours, and we'll see if we get more of that today when the US market kicks out for action. Back home, I just want to talk about earnings here as well, because the way the market sees it, there doesn't seem to be a major big outlier number that can move the needle at an index level that can really power through a huge rally. We've not quite seen signs of that, not even with Reliance after the earnings. Maruti came out yesterday, and we had a bunch of numbers post-market close as well. Bajaj Finance, yes, the growth is good, but we already had the Q4 operational update. There could be a concern point on the margins. The company's already guiding for slightly lower margins going forward. If you look at others, the life insurers, yes, Q4 was great. We know that because they had the budget pop coming through. The question is what next? And there, if you see some of the brokerages on stocks like HDFC Life, it's a toss-up in the air. There's no immediate clarity on whether FY24 is going to be a major year. Look at Voltas's numbers. Revenues are in line. Huge amount of margin pressure because of higher raw material costs, higher OPEX, etc. So again, the short point is that we don't seem to be getting this mega number that can sort of decisively change the context for the market. We got that in ICICI Bank. We need to see another major one. But even without it, the market continues to march higher. And today is the final day of the series. And Nigel, I guess, earnings aside, something's been moving because even if it's incremental 20, 30 points here and there, we are very close to the top end of the range.
Well, it's adding to the kitty, right? Those 20, 30, 40, 50 points, and it adds ultimately up. And what a series we've had. Today, we're going to be drawing the curtains on a very, very good series. And you talk about markets giving you some pleasant and unpleasant surprises. Well, this is a pleasant surprise. We got into this April series with the FI's net short. Things were looking a little bit subdued. The last few series haven't been great. And now you're bracing for the best series all the way since October. In October, we gained closer around 5%. We were up 919 points or thereabouts. The Nifty has done very well. The Nifty Bank, that's the one that's really leading the way in this series so far. Buy the dip has worked, right? So I guess you need to stick to that. And when you have global cues a little bit subdued or more or less flattish, you're getting that intraday dip, or even at the start of trade, there is a bit of a dip. The additional positive is we have weaker dollar as well as lower crude prices. Now that works well for an emerging market, particularly like India. What did the FIs do in the F&O market? Well, yesterday they added close to 7 to around 8,000 contracts on both sides, on the long as well as on the short side. On the index option space, they bought more puts than calls. As should be mentioned, there is some fear about a banking crisis that could possibly happen in the US. Hopefully, it's not that deep or that bad. But in case things go wrong, there is some protection on the downside. What's heartening, though, is you're getting into an expiry day with very, very aggressive put writing. And at lower levels, puts were getting written yesterday. 17,800 put, 17,700 put. Between them, there were 80 lakh shares added at both those two strikes, which brings us to the level. The 17,800 put, it ended with a premium of around 30 rupees. But, at some point of time, it was 50, 60 rupees odd. So for those 17,800 put writers, their stop loss comes in at around 17,740. This is positioning getting into expiry day. So that's a crucial support on the downside. We're a whisker away from the 100 DMA. So keep an eye out on that mark. But the highest that we have seen in this series is close to around 50 points away from yesterday's close. So can we end this series on a high? That's the question. The Nifty Bank has been in fine form. It needs to continue. Highest open interest at around the 42,500 put. That's close to around 300 points away from current levels. Pull up the Nifty Bank actually. And writing has been seen at around 42,700 put. The premium yesterday at the start of the day was around 300 rupees odd. So for those put writers as well, they are looking to defend the 42,500 odd mark. SGX Nifty suggesting a bit of a subdued opening. Not too bad. Get a little bit of a deeper dip. And the screen is telling you buy the dip. So let's keep an eye out on that. But though, brace yourself for some volatility in the final hour of trade, given that it's expiry and it's been a very, very good series for the bulls. Can they end on the high, importantly?
All right. Slow and steady, and that's the way the market is panning out to be, which is not such a bad thing. Well, before we go any further, let's quickly tell you what's lined up in the first 30 minutes of show on the show today. We get you a quick check on markets across the globe. Dean Kim of William O'Neill and Company will join in to discuss the global setup. Our research team, a little after that, will get you the top 10 stocks to watch for the day based on news flow, results, lots of them. And at 8:30, we